Hello everyone, this is Evan here from the Trade Risk on Friday, October 7th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names and trade ideas at the end of this video. We'll jump right into things today. It was a very boring week out there. Not a whole lot of movement, not much change in the bigger picture, so I don't think we're going to spend too much time kind of beating the same drum here on what's going on with the market environment. I do want to point out some of these, I've labeled some of these recent ranges that we've been in recently. Starting back in July, we kind of went sideways in a 16-day range here, as you notice, from about July 14th to the early August. Then we kind of traded in this 23-day range in between, roughly SPY 217 to 219. And then most recently, we're in this now 20-day range in between, roughly 212 and 216, 217. The levels aren't exact. They're not meant to be, but just more or less you can see the general lack of direction here in the markets over the past 3 months. This isn't new. This isn't a surprise, but it just speaks to kind of the environment that we're in, that we continue to be in. And it can be very frustrating if you're out there kind of, hammering away and aggressively trying to get into trades or trade momentum or breakouts. Can be very frustrating just because there isn't that underpinning, that sort of wave of market momentum and demand in this market one way or the other. So you can just feel frustrated and chopped up. Nothing's changed here, right? We spent the entire week moving sideways. We thought, or at least I was under the impression Friday might be the catalyst with the whole, unemployment report out to finally send a little bit of spark to this market to get moving out of this range, or at least rally to the top end or the bottom end. And we didn't see that. We really saw, a fairly soft session here on Friday, but, ultimately it was only down 34 basis points on the day. So not a whole lot of movement. We're in the dead center of this range at SPY 215. Notice the 3 times, this Friday, on Tuesday of this week, and then on last Thursday, we had these pretty wide range kind of sell days where we traded below SPY 215, but magically we got this, roughly 75 cent to $1 bid off the lows on each and every one of those days, and we ended up closing at or right around this 215. So it's certainly a magnet. It's the point of control, kind of midpoint of this range, and the market really just hasn't tipped its hand to see which way this wants to go. There's still just quite a bit of cross currents here. There are sectors and individual names that are working higher. They're on a rotational basis, and then there's some that are just getting beat up and are very weak, and I think we don't have enough on one side or the other yet, of course, to sort of move us out of this sideways range. So this is the story. It continues to be the story. For me personally, this was a very boring week. Didn't do a whole lot. I think we put on one new trade this entire week, and we've just sort of been sitting here and waiting patiently, preserving our emotional capital and our physical capital, and just keeping a high cash position, waiting for more opportunity to present itself. I don't know when that is. We have earnings coming up. Starting earnings season will start off basically next week, and then we have elections in 4 weeks. I don't know. Maybe the market wants to wait for November, or a little bit longer than 4 weeks until the elections, but next month anyhow, and maybe it's just on hold into that event. So we'll have to see. For now, the levels still are the same. 212.50 on the downside, 217 on the upside. You can of course refine those levels a little bit to maybe 214 to 216 if you want to play a real tight kind of range here, and that's sort of what we're in. We're still in kind of a breakout, watch, wait and see mode. On the week in general, we finished down 58 basis points on the SPY. You can see it's still holding the 20-period EMA, and that's about it. So if we go back to the IWM now and take a look at what's going on there, a lot of the same sideways chop here, right? We're in between, we're above 120.50 support. We're below the highs of the year at 125.50, and we're at the exact midpoint at 122.80. So there's a lot of supply in here. You could refine the range to 124.50 down to 122.50. but more or less same exact scenario, just slightly different levels here on the IWM. And then the Qs, once again, holding up closer to the highs, but still just a lot of sideways overlap. Still above the 8 and 20. That's very constructive. This is certainly the bright spot in the market, and this is what's helping kind of keep things afloat, are some of these high cap, high beta names. So the Qs still looking good. 117, call it 118 support is still being held. That was the breakout level from August and September. And we have the all-time highs here right around 119 to the upside. Now let's get into some of the other major markets here. TLT sold right off into that prior support level, get a nice little hammer off of that, might provide a little bit of a bounce heading into early next week. Let's see how that looks. Still, fairly damaged chart here after we broke down from 138 support. You could see the 8 and 20 moving averages curled lower, momentum to the downside now. Still, you could maybe see this bounce kind of play itself out next week. It'll be interesting to see if it can actually sustain itself, or perhaps we do see even more selling below these September lows. So we'll have to see how that acts heading into next week. Got to be careful though. Not a place I'd want to be just yet. Certainly would want to see more strength demonstrated before jumping in there. Move to the metals next. Gold. We talked about the weakness here, and we saw more weakness pretty much continue from our midweek video that we did. Gold, while it did finish up on Friday, still looks in trouble. Go to the weekly chart, you can see breakdown of about 5% this week. That's a big move. We talked about the bulls needing to try and put in a higher low here. Remember, the weekly time frame still, you could still paint this with a constructive brush. It is still making higher highs and higher lows, but this pullback now, this kind of on this latest leg, this breakdown, this pullback is starting to get pretty deep in its, sort of percentage / correction territory. You don't want to see it come all the way back down to 115. It's already given back more than 60% of this recent leg from June and July. So if you're a gold bull, got to maybe be a little bit concerned, but hopefully that they would start to stabilize this next week. I have no position here, but be interesting to see how it plays out. Silver in a very similar situation, still making higher highs and higher lows on the weekly chart, but the correction in this retracement is starting to get a little bit long in the tooth here, a little bit too much of a pullback here to be that comfortable with if you're a long silver bull. But once again, we'll have to see now that some of these gaps perhaps have gotten filled, come back down, retest this old support around 16. Maybe we can start to see some stabilization here next week, but momentum now very clearly to the downside on the daily chart. If we go into oil, continued to kind of march higher this week, finished up 3.66%. It pulled back a bit on Friday, but this has had a hell of a quick run, all stemming from this kind of breakout day back here on Wednesday. This is a trade that we got involved in back on Wednesday. We're out of this position now, but it had a nice leg higher, came into some prior resistance. It looks like, more or less it's finding a little trouble right around here, had a little overshoot of the August highs, but coming back down, catching up with some of these fast-moving averages. Healthy action, looks good. Momentum seems to be turning to the upside. Weekly chart, you can see starting to get that bullish crossover on the MACD on the 8 and 20. So constructive action more or less on the weekly chart, longer term time frames there for USO. And UNG having a nice breakout here. Weekly chart, take a look at that. Great looking continuation pattern. We're back in here long UNG. Looks nice, had an almost 10% move this week. That's very constructive, back to year-to-date highs. So things look good here. Back on the daily chart, certainly a little bit overbought here in the near term. Had an almost 5% surge on Friday alone, but certainly would not be a place I'd want to try and fade at this point. And I'd look for some opportunity in that if we do see prices pull back here early next week. Finally, let's look at the US dollar. We haven't looked at that in quite some time, but you can see that's starting to shape up here. This support down here right around this 24.25 level has held, and you can see we started to make this break above the September highs here, and it looks like we're trying to get back into and just trade to the top end of this channel that we've been trading in for the past couple of years. So the US dollar bulls here starting to get a little bit of momentum behind their step there, so constructive there on the US dollar. Now getting into some of these sectors that have been moving the markets, nothing's changed here, so I don't want to spend too much time, right? Semiconductors continue to be the place of strength. continuing to lead. They're at all-time highs. This follows very closely by the technology sector, XLK. And then financials were really strong this week, up about 1.66%. You can see back to the daily chart, they've got some momentum back on their step. They broke out from this range here above 1935, 8 and 20 starting to curl back over. So financials definitely a good place to be right now. There's a lot of names and a lot of interesting quality looking setups there. They will be reporting earnings though pretty soon. A lot of those big financials anyway coming in late next week. On the downside, right, nothing's changed here as well. XLU continues to get hammered. These are everything that's tied to the rate sensitive sectors. Interest rates, IYR also have been beaten up quite a bit, and materials actually, I'm going to put this one on the vulnerable list here just because of the move on Friday here. Take a look at support now, and some of these recent lows are being challenged. So this is a little bit of a concern here for this sector. Just keep an eye on this. You got a pretty actionable, short breakdown setup here just based on Friday's candle. And then if we see follow through next week, of course, that could be a little bit of trouble for this sector. So keep that on watch if you're looking for some short exposure. And now let's jump into some of the individual names. Apple, very, very resilient here. You can see actually finished higher on Friday, and just very bullish, kind of healthy consolidation here. Looks like on a strong market, if we can get the market to stabilize, Apple would be one of those that would start to lift or lead us higher here. Got some good support down here right around 112 that's been demonstrated. That's a good line in the sand to use. Not in it, but I'm watching it pretty close. Facebook, also another one that's getting really, really tight here. Very kind of historically tight range here. And this one's probably poised to break out pretty soon. It's got earnings in a couple of weeks, I believe. So, you certainly have that to consider. But otherwise, pretty tight action here. So you want to keep a close eye on that. Amazon also, just not giving up anything, just sticking stubbornly near these highs, riding, even a distance away from a rising 8-period EMA. So this one's just in its own world, traveling to all-time highs. Just tremendous strength there. And again, this is what you're seeing really kind of hold up, the bright spots of the market here. A lot of these tech names and cloud names are just sticking up there. Twitter, let's talk about Twitter. This one on a weekly chart down 14% this week. Obviously an extremely bearish week here, outside kind of reversal week, but you're still above the bullishly aligned 8 and 20 period moving average, close just under the 8 period. It's got to hold this level. I mean, I think you clearly, back to the daily chart, clearly with this gap lower here of 20%, you completely cut out all of the froth in this name, and now it's just going to be interesting to see if it can actually stabilize here, perhaps fill this gap and then start to stabilize and get back above 20. I think that's going to be your clues into next week. Look, I mean, this week alone, yes, we had a 14% pullback, but just keep in mind the prior 2 weeks we had an 18.5% up week, and then we had 2% up week. So basically retraced half of that, or 60% of that. So once again, just keep perspective depending on where you want to live. Of course, this is headline driven. It's going to be volatile. If you're in there trying to maneuver on a day-to-day basis, you got to be careful. But the structural trend here and this potential bottoming pattern is still intact. If you're trying to play for an immediate buyout, I don't ever suggest that as a strategy on itself in general, but that you may not get right away. But if you're playing this for some type of structural bottom, I still think you have that technical kind of picture here that you want to see. If you start to lose $19, start to lose $18, then to me that would be much more concerning on a bigger picture kind of technical basis here for Twitter. So just depends on where you are, what you're trying to accomplish there, but definitely be prepared for some headlines if you're involved in that. Netflix had a monster week this week, up 6%. Remember, we talked about this very, very tight range in here. We got the upside breakout. I like this. I would be involved in this on the long side if it wasn't for earnings coming up in such short order. But I like the kind of bigger picture resolve to the upside here. I think you got some good levels to measure risk against. So I do like Netflix into the near future. Another name idea that I want to talk about, TWLO, which has been pretty popular recently. It's been a good momentum leader, recent IPO, but it's been a nice leader here for a couple of months. Back to a pretty interesting level. This was a breakout area back here from mid-September. Came all the way up to $70. We've pulled back. We're $10 off the highs, kind of retesting this breakout level, retesting the 20 period. So you want to see if we can get some stabilization here. I like this name. It's been a leader, and leaders tend to continue to lead. So if we can start to get some traction above $62, $63, get back above some of these recent highs here, I would like it. And then LN, Line Corporation, this is again another one that's been a recent IPO and a pretty good trade as well to the upside for the past couple of months. Is consolidating nicely near highs above the 8 period, above the 20 period. Once again, if we can get a breakout above $49 or so, it'd be a name that I would be interested in. So we'll end it there on this weekend's video. Hope you guys had a great week trading. Have a great rest of the weekend, and I will catch you guys soon. Thanks for watching.